Hey guys, my name is Max Convexity. Welcome back to the Daily Covered Caller. I appreciate y'all for being here. We didn't have a show yesterday. I was busy with some other stuff, but I did get caught up on some other stuff. I have some cool things to show you guys. Let's start over here with the heat map. See what's moving. Now today it looks like the market's bouncing a little bit. Yesterday everything was down. Today things are bouncing slightly. SPY's up 1/3 of a point. Pretty nice little bounce. Really no red other than crypto. I mean, volatility doesn't count because red volatility is actually green, right? Because it's bullish. So there's really no red on the board, that's not an inverse product that I see. I mean, maybe Japan down 1/2 a point. Crypto, of course, it's not getting killed or anything. All right, so let's look at the Defiance funds. Did you guys have a chance to watch my interview yet with Cy from Tap Alpha? He's an interesting dude. He has a fund called T-Spy. It's going to be kind of similar to iSpy. It's going to be better. I'm not saying it's going to be just like it or he's copying it. They have big plans for it. It's hopefully going to be a lot better. It reminded me of iSpy at first glance. It had some similar characteristics. But that's a compliment because iSpy is a good fund. All right, so let's check out. We'll start with Triple QY, kind of the flagship. And I was noticing the old flagship taking on a little water lately. I hate to see this, but look at this assets under management, just 187 million. And just a few days ago, it was in the 200s, and a few months ago, it was a quarter billion. Anyway, it's still nothing to sneeze at. I would love to have an ETF that had 187 million under management. So, all right. So what these guys did today, they sold the 19020 strike option for 120, which is kind of a so-so or low. It's low vol. It's not as low as some of the ones they got last week, but it's nothing like 248 or, 150, 200, 202, 219 like we had been getting. Balls coming back in. Well, in any event, right now the market's trading above the strike price. So it's out of the money, which is good because we're the seller. So that's awesome. So let's check it out real quick. Profit box should be drawn. It is, yeah. So market is face ripping. Could be a dead cat bounce. I'm going to talk a little bit about market timing at the end of this video. We're going to look at the volatility report today, which we haven't done in a few days, and talk about market timing. But first, let's get this business out of the way. So that's Triple QY. This is what JEPY's profit box looks like. All right, it was a full profit. Now it's pulled back right about to max profit. Here's Russell's. Similar situation, full profit, pull back to max profit. I want you guys to notice I updated the dividend estimates, so they're all current. Triple QY, we're looking at $2.91. This is only after 3 days. Okay, $2.91, which would be 99%. Like I say, it's only after 3 days, but I did make the math where it at least is figuring the fractions right. All right, there's 21 business days in a month. We've had 3 of them. It just takes this and multiplies it by 12, takes 90% of that and divides it by how many shares there are. It's usually pretty close. Not so much on USOY last month, but on these, it's usually really close. This is easy to figure. IWMY, Triple QY, and JEPY. All right, so we're looking at 308 on this one, which would be a yield of 103%. I would caution you, it's early though. 99% on Triple QY and on JEPY, 115%. We're looking at $4.10. So I'm sure those will come down. I would bet you those will come down. All right, so let's look over here at USO. Let's just look at USO on the chart here. The reason we look at USO, this United States Oil Fund, and it's been selling off. It was one of the ones that was down the most yesterday, bouncing a little bit today, but not much. The reason we look at this is because there's a high yield fund called USOI by Defiance that we track that trades it. So these guys, unfortunately, I'm a day or two behind on the profit boxes here. Okay, caught up on the profit boxes. We're about mid-profit, midway through profit. Okay, so now let's look at some of the stuff I've been working on. Okay, so I thought this was interesting. This is the change of all these ETFs over here, but from the start of August. And so it's the percentage change. But, well, actually, I take that back. But then I switched it at the start of September. I switched it. So these changes right here are just for September. So these go from the last day of August. So this is a graph of August. This is going to be a graph of September. So we'll see how these react. Kind of like in August, we had a sell-off at the first of the month. It looks similar to over here. And we had old ZIVB, which is the most vulnerable to sell-offs, pulling back 7%. It's rallied a little bit today, and it's only down 5.5%. Everything's rallied today pretty much. But triple QD or XDTE did not have a good day yesterday. It was down more than the index, and it was down 2.2%. And that's what happens. That's what happens when you sell calls in the morning. It bit them in the ass that time because there was a gap down. So in gap ups help them, gap downs hurt them. Anyway, just made them lose a little ground to the market. No big deal. Still a great fund. And they're recovering a little bit today. They just need a big day, a big gap up day or two, and that'll put them right back in business. In any event, it's kind of doldrums this time. We can see that Tesla versus crash trade is coming back. It's only down 7.5% right now, a little less. Okay. At one point it was down, the red line represents what the pairs trade was down. At one point it was down 20% in early or mid-July. But the pairs trade has bounced back to only being down 7.5%. And it's yielded 20% while it's doing this. We'll keep tracking that. That's where you own Delta, or you own a Delta balance, but it doesn't matter. You own equal, because they're pretty similar. You own equal dollar amounts of Tesla and Crash, whatever that comes out to in shares. And that's close enough to being Delta balanced more times than not. But anyway, that's what this index measures. So if you'd done that since inception, you'd be down 7.5%. Your NAV would be down, or actually your NAV would be down like 25% or something, but you would have or be down 27.41%, but you would have earned 20% dividends. So the investment itself would be down about 7.5% right now. Need some more of those dividends to come in. All right. So let's see what else we have. Now I made a different chart that look at these funds down here at the bottom. I added T-SPY. That's the fund I made the video about. The guy I talked with, Cy, he was the founder. He's an interesting dude. Go watch the video. But we're going to start tracking his fund. I think it's going to be a good one. He's coming out with one on the NASDAQ, and he's coming out with one on the Russell. He's already filed for the one on the NASDAQ. So hopefully it'll be coming out soon. It depends on how popular these are. Hopefully everyone will buy. It depends on how well they sell. If they keep selling like these covered call funds, they can barely keep them on the shelves. However, that's until lately on some of the Defiance funds. I think Defiance kind of cannibalized itself a little bit when they brought out SPY-T and Triple QT, or I know they did. That probably took 10% of the assets under management away from Triple QI and JEPY. But they probably didn't bother them that much since it's staying in the company. But I think Roundhill's success has also stolen assets from Defiance, and you can see it in the AUM. I'm not saying it's going anywhere or anything, but it's not doing as well as they aren't doing as well as they were a few months ago. And I'm not talking option strategies anymore. I'm just talking assets under management. The option strategies are going great. They're killing it. Look at, well, not really, I should say killing it. Triple QI is down 73 cents a share this month after today. But, no. They're all three down after today. Well, no, it's good. Look, JPY did not have a loss yesterday. How did that happen? Let's see. Maybe that's a mistake. What do you want to bet? What do you want to bet? It was a mistake with the market being down like it was. Yeah, what do you want to bet? It's because I didn't have my update yesterday and I missed some of the stuff. They sold the 56.60, but the market cratered yesterday. It should be way in the money. It should have been a huge loser. Well, I'm going to have to go back and figure it out. That's what happens when I take one day off. It messes up everything. And I stayed up late working on this sheet last night, and I worked on it for an hour before I came on just now, and I thought I had everything fixed, but that's crazy. I don't know what the heck happened there. So right here, they sold that's today. They sold that option today, but yesterday, the day I missed, the market closed way high, and they sold this up here, the 56.60, and they didn't give very much premium for it. Settled all the way down here. So yes, that's a gigantic loss. It's probably one of the biggest losses they've ever had. I mean, it's easy for the spreadsheet to figure out what in the hell is going on. I don't have any idea what's going on. I guess I got the wrong obviously I got the wrong close current, so I'm sorry about that. My bad. I tried to have all this stuff done before 55.29, so and make sure it doesn't change anything else. No, I think it's isolated instant. Okay. All right. JPY is down 55 cents a share for the month. Triple QY is down 73 cents a share on the month. IWMY is down. And this is jacked up too. Okay. 1 second. Let me copy this down. And these guys are down as well by whatever that number is, 62 cents a share on the month. All right. So, all right. Then USO, we checked them. We've got their profit box. All right. Have we checked the old-fashioned buffer report? All right. Here's the old-fashioned buffer report. Let's see what's standing out. Look at JEPY killing it. That's really beautiful. SPY-T also beating the benchmark, as is JEPI, as is SPY-I. I was just saying good things about SPY-I. Something's jacked up on iSpy. It's down every day. I've been having problems with that. I'll have to look into that. All right, XDTE beating the benchmark. That's great. SVOL's pulling back a little bit today, but ZIVB is up today. That's good to see after yesterday. They took it on the chin yesterday. In fact, they were down more than any of the other funds yesterday. And you can see it right back the past 2 days. They were down nearly 7% 2 days ago. And then this is even after today. This is after today. This is with today's bounce factored in. This is a cool chart. This is a live chart. Everything else is jacked up, and somehow this chart's working perfect. I don't understand. Don't understand. Okay, so let's see what else looks good. Yesterday, everything looked bad. Right now, everything looks good. I don't think it's going to last. We're going to talk about that in a little bit when we get to the market timing part of this. But everything's looking good. KQQ's even up. YMAX is up. Everything looks great. IVVW killing it. THTA killing it. That's great to see because they took it on the chin yesterday also. So just basically all that's down today is Bitcoin. Bitcoin and for some reason triple QT. I'll check on iSpy because this is jacked up. This is down every day. There's a problem on the spreadsheet too, where I do iSpy every day here. The formula doesn't work. I have to go look and input this number. In fact, this number 4292 was what it was a few minutes ago. It could have changed. I cannot figure out how to get Google Finance to update iSpy's price live. I've been doing this nearly a year, but it would just, there's some kind of something wrong with the data. It's jacked up. Anyway, so right now this thing's trading 42.88, so I need to switch it. But I just try to put it on right before I come on the show, and then it's good enough for the show. Just switch it once a day. And it made a little bit of difference. But in any event, so I really like this chart now. So what this shows is each fund for the whole month, okay? So like the benchmark, SPX was down 2.1 the first day. Then including today's bounce back, it's down 1.7% for the month. All right? So this is yesterday and today. And I'm going to keep doing that and building a chart like this. I thought this was a good idea too, so you can see, how fast they're bouncing back or if they're losing ground. Theta's actually losing a little bit of ground today. No big deal, but JPY is holding steady. iSpy's down more than it was yesterday. This data is the right data, I think, also. This data is not the jacked up data, because this is based on the one that I have to hand input. So maybe on the buffer report, maybe I need to go easier on the buffer report. Maybe it is really, where is that damn thing? Maybe it is really down. Okay, where was it? Maybe it probably, I guess it is really down today. I mean, all right. Well, that happens. That happens. It looks like they probably paid a dividend right here. I bet it was 64 cents. I think I remembered. All right. In any event, I think I got the buffer reports going a little bit better. Okay, so now we're going to do the volatility report. Now, we didn't have a volatility report for a few days. The only one that requested it was Tom. So I look at the volatility as a barometer of the market, and it's just ways you can look at the volatility in the market, and what I'm trying to determine is if professional accounts are hedged. Is everyone bought puts? Are they hedged or are they not hedged? And you can tell that with the volatility. So sometimes you can see the market selling off. You can see the market's going to sell off before it happens. Not this last time. This one that happened yesterday took me by surprise, or took the volatility report by surprise. So let me show you what it is. So all we do is make this bigger. Okay. So basically, it's just basically the bottom pane. Okay, now in the top pane, I usually put, the top pane is where VIX goes. Based on what VIX is doing, it generates signals that go on the bottom pane. I follow two different time frames. A longer time frame, which is these big boxes. So the longer time frame, what this shows you is the longer time frame right here. It's not drawn exactly right. It shows you right there something based on this chart that I look at. I've looked at for years. Went bullish, and of course the market. This is the SPY right here, and the reason there's gaps is because it doesn't trade 24 hours. It's nighttime, but it went from 512 all the way up to, heck, it went this all the way through May, and it just stayed bullish. It went all the way up till by the time it made a signal the other way, it was like at 552, and that was like July 18th. And so it did predict that sell off pretty good. But anyway, I also follow a shorter time frame, and the shorter time frame is these green and red bars. And anyway, you can see the shorter, even the longer time frame is still red, the shorter time frame has a green bar. Shorter time frame is green there. I guess I should make this part of the chart yellow. I'll do that tomorrow. But anyway, then the shorter time frame went red here, so we have double red. And that was a bad signal. Then the shorter time frame went green, and the market didn't go up; it just went sideways. Then the shorter time frame went red, and the market is kind of selling off. But anyway, so right now both time frames are red and have been since yesterday. But we'll keep an eye on that, and then I'll also show you how I use it. Now I wanted to let's look over here at the SPX. Or we'll look at the SPY, since most people trade the SPY, or a lot of people. The SPY is more accessible. I'm going to make this. I'm going to minimize this. Okay, I put in here a couple of open gaps, and I did this yesterday. And there is a gap that was right there, and it looks like we came close to filling it. If not, I suspect they might try to fill it today, even get to the bottom of it, which should be 545. Lots of times what happens, like yesterday's sell-off was pretty intense. Well, lots of times what happens after an intense sell-off, the first bounce is what they call a dead cat bounce. And the idea is if you can get it up close to the Bollinger Band, to the middle Bollinger Band, it might make a good place to put a short on if you miss the initial short, because it would have been great to get short yesterday morning at 556 and then watch the SPY fall to 551 at the end of the day. Okay, then it opened at like 550, and now it's bounced to 554. Well, 554 in hindsight's looking like a place to get short. Now that's if you have an overall bearish, an overall kind of bearish outlook on the market. So let's think about that. And overall, so in what I look at, yes, the longer time frame is bearish, and now the shorter time frame is aligned and is bearish. So yes, so that's so for me, I'm looking at a rally as something to sell, right now, and especially if you get one up here, but to about midway, it's a good place if you miss the first rally. I've been saying forever, or for a month, that I went back here and I started saying it back here when the SPY was like at 545. It went up a day after I said it. It went to like 550. I missed the last little 5-10 points of it. I was squawking this thing's going to sell off around 545. But it was because of what I was seeing on this. And then we got the confirming signal and some other stuff. And sure enough, it did sell off, but then it bounced. But I'm thinking that this right here might turn into this again. So we'll see. And it's not like you had to get this on day one. Even if you missed day one, it rallied at the end of the day. And then it sold off on day two, but then it rallied right to the midline. It gave you two shots to the midline where you could have tried to get back on a short. And even down here, it gave you another shot. Now, this one would have been a bad signal because then it reversed. Nothing works all the time, but usually the first retracement is the one you're looking for. But in any event, we'll see. Everything was lining up bearish here. Everything's lining up bearish here. These are just numbers on the chart. These don't predict anything, or they don't really, nothing, no lines on the chart can predict anything. They can show you what has happened in the past. You can try to look for patterns and stuff. But all this stuff is using moving averages and is backwards looking. Um, so I just look at this as a tool, and then I use my judgment on top of it and try to put together something that makes sense. So I'm saying sell the rips until otherwise. I think I say sell the rips till otherwise. This will probably go for 544 by the end of the day. I'm thinking, or at least the middle of this gap, 546, something like that. Then who knows? Maybe it'll bounce from there tomorrow. I don't know, but I think we'll probably get 546, 544 today. But that could also, if we close outside of the Bollinger Bands, that could set off more selling. When we get outside the Bollinger Bands a couple of periods in a row, especially, it sets off a cascade of selling. And even if you have a rebound rally like we had here, it's generally a good place to sell. Oh, something else I was going to say is not only have I been bearish since mid-July, and I think the high's in for the month right now. I mean, I know that's on the 4th of the month. That's pretty bold claim. I could be wrong, but I wouldn't be surprised if the high's in for the year. I mean, I just don't see the rest of the year. I see a best case us chopping. Now there are, but I've heard people say we're going up 40% by the end of the year. However, yesterday I heard Tom Lee on CNBC, and he's a pundit, and he's been pretty accurate at times. He's saying that we drop in here. I think we do as well. I actually don't know what he said. I just saw somebody tweet about it, but he came out with some bearish stuff. I need to watch what he said, and maybe I'll make some content about it instead of just guessing about what he said. In any event, but I'm bearish too, so it aligns with what I'm thinking. So we'll see. Like I say, I don't think you should time the market if you're properly allocated, 60-40, whatever. You have some income, you have some bonds, you'll be fine. But if you like to trade the market also, what I do is take about 1% of the money I have total and use it just to play options with. I mean, and even if you lose it in a year, it's just 1%. But I take long shot picks with them, and I try to hit home runs, and I usually don't, but it's just fun money. That's the way I like to handle it. Anyway, fun money accounts right now should be short and should have been since yesterday, in my opinion. All right, guys. Well, go get your puts, or let me know if you disagree. Watch, he'll probably be the mother of all rallies now. All right. Well, I'll look for your comments. All right. Have a good one.